Phil talks taxes. He has been for over 45 years, and there isn't a human on the planet with more experience solving problems on behalf of taxpayers. He wants to solve your problem, whether you know you have one or not. So if you do have a current tax problem, call the office or visit TaxHelpOnline.com. If you don't have a current tax problem, your current tax problem is taxes themselves. So let's get into the policy issues of today. And in fact, there is a government shutdown looming. Does that affect taxpayers?
Well, you'd think that if the government shuts down, we won't have to pay our taxes anymore. We won't have to file our tax returns, but the news is not that good. The IRS announced today that if there is a government shutdown, none of the IRS employees will go home. They will continue to work. So all the return processing functions are going to keep going on. All the tax return or tax refund processes will continue to operate. The IRS is not going away. So unfortunately, you can't fail to file your tax return just because there's a government shutdown.
The government's getting shut down, but the IRS doesn't count as government, I guess.
Counts as government, but let's face facts here. The IRS, if you're going to think of a single essential function of government the way we're set up today, the IRS has got to be at the top of the list. They collect the revenue, right? If we don't have the IRS collecting revenue, federal government's got no revenue. So, that is an obvious problem. So they're not shutting down. They're going to continue to work.
I guess in a sense, the IRS doesn't need the federal government to fund them. They can just go and get the funding themselves. So,
well, they got the tools to collect the tax. There's no question about that.
So how does that affect you as a tax pro, or does it just not?
Well, it continue. We continue to function, government shutdown or not. The last couple times the government shut down, there were different elements of the IRS that did shut down. Revenue officers, for example, stopped operating. Most of the audits shut down, and a lot of the tax court operations shut down. So we were on hold for there was roughly 45 days or so the last shutdown occurred, and so the IRS was out of business during that period of time. But again, they made it perfectly clear that this time they're not going home. They're going to continue to operate.
We've talked about the FAIRTAX in the past. We mentioned a couple weeks ago that Buddy Carter, I believe his name was
correct. Yep.
Reintroduced the FAIRTAX back into Congress in order to get voted on again. The FAIRTAX again is the retail sales tax proposal that eliminates the income tax in its entirety. What is the FAIRTAX doing that the income tax isn't doing?
All right, well, that's a good question, because what it does is it strikes right at the core of the structure of the FAIRTAX versus the income tax. The personal income tax, the corporate income tax, which are the two taxes that raise about 65% of all government revenue, have as its base income. So in order to comply with the income tax return filing requirements, you have to report your income. I mean, this seems simple, right? And so part of the problem with the income tax is it requires self-reporting, and it requires people to report all of their income from whatever source. Legal and illegal sources alike have to be reported on the tax return. The FAIRTAX changes the base. The base becomes consumption, not income. And so the FAIRTAX then does not require the filing of tax returns, the reporting of income, the claiming of deductions, any of those kinds of things. The FAIRTAX then assesses the tax at the point of purchase on all consumption goods and services at their final point of purchase. So the retailer collects the tax and is responsible to pay that tax over to the taxing agency. So the taxpayer then is the individual consumer. They don't have to keep records. They don't have to file returns. They don't have to make any kind of reports with the IRS or the state taxing agencies. They just pay their tax at the time of the purchase. So it is a fundamentally different structure. Income is the base on the one hand, consumption is the base on the other hand.
So I guess the question would really more along the lines be, what is the income tax doing that the FAIRTAX wouldn't be doing? And that the answer is so much compliance, so much of the burden of compliance.
Oh yeah, no question about it. You could really answer the question with one word, and that is invasiveness. The income tax is the most invasive way to collect a nation's revenue that could possibly be imagined. The income tax requires the making and keeping of records. It requires the filing of tax returns. It requires the physical payment of the tax, of course, which a lot of people can't do. It requires businesses to withhold taxes from their workers for federal income taxes and Social Security taxes and state income taxes for that matter. Businesses have to make and keep records and submit reports. This filing season, Josh, there will be about 165 million individual income tax returns filed and another roughly 110 million business tax returns that will be filed. In addition to that, the income tax requires every citizen citizen to be spying on their neighbors, right? And so what I mean by that is that citizens and businesses have to file information returns with the IRS, W-2s and 1099s, that report transactions between businesses and individuals. So there's roughly 5 billion, that's with a B, 5 billion information returns that'll be filed with the IRS this tax filing season. So we've got, 5 or 6 pieces of paper for every man, woman, and child alive in America that this income tax system requires to be filed with the IRS. And of course, that has to be processed. That information has to be assimilated, used, and put into practice for compliance purposes. So it's highly inefficient. But invasiveness really sums up what your question. The income tax system is the most invasive way to collect taxes that there can possibly be imagined.
Now, you said five pieces of paper or 5 documents per man, woman, and child? Because I've seen a tax document and that is not one piece of paper.
Well, you're right. It's a better explanation, because a tax return can be 20 or 30 pages long. No question about it.
And in that case, I think it's a bid for environmentalism to get rid of all of that paperwork, actually. But no, on the other hand, I mean, even the processing, processing that data through electronic system, that takes a lot of energy. That there's no reason why they need to be that invasive. But you also said something about of the taxes that you could imagine. Now we can imagine a lot of different kinds of taxes in this country. There's about 90 different types of taxes, from property tax to death tax to sales tax. I mean, now obviously we're talking about the consumption tax, which is a sales tax. Well, right now the primary method of revenue is income tax. So in order to replace the income tax in terms of revenue, what would we need to look at it for a sales tax?
Well, if we're going to be revenue neutral, and we're going to take all 5 of the taxes, major taxes that exist at the federal level, which the FAIRTAX does: personal income tax, the corporate income tax, the estate and gift tax, the Social Security tax, and the unemployment tax. Now, when I say Social Security, I'm talking about the tax, not the benefit program, right? Tax is means by which the benefit program is funded. So I'm talking about changing the method of funding the benefit program, not taking away the benefit program. But those 5 taxes collect literally 98.5% of all federal revenue. What the FAIRTAX would do is replace all 5 of those taxes with one comprehensive national retail sales tax on all consumption goods and services. And the rate, if you're asking me about the rate, would have to be about 20. Well, what the bill does is it sets the rate at 23% to start with, and then that rate is adjusted based on federal spending going forward.
So roughly, if the maths for me, everything that you buy is going to be roughly a quarter more expensive, but you get to keep all of your money at the end of the year. You don't have to pay a tax. You don't have to pay an income tax.
Well, there's 2 things going on. First of all, yes, everything you buy would have that 23% tax on the top. However, you would get your full paycheck, right? So there would be no deductions from your paycheck for income taxes, for federal income taxes, for Social Security taxes, and medical taxes. All of those deductions would be eliminated. So you would get your full paycheck, right? So now you're buying goods and services with more take-home pay. That's number one. Number 2, the studies are pretty broadly confirmed that when you eliminate the compliance burden from the federal income tax system, then every product and service in the marketplace can be significantly less expensive. So for example, when you buy a $10,000 automobile, you're not paying $10,000 for the car. You're paying about $8,500 for the car, and another $1,500, as much as $2,000 for the compliance costs that are built into that product. We did a study years ago that indicated, and I talk about this in my book, How to Fire the IRS, the fact that the compliance costs that are heaped upon businesses and individuals in the United States equal up to 65% of the tax collected. So what that means is for every dollar you pay in taxes, it costs you another 65 cents to get it there. Those are compliance costs. That's over and above the tax liability. Right now, it is true that individuals, especially individuals that file a simple tax return with just a W-2, are not incurring a 65% compliance cost. So those costs are disproportionately loaded on businesses, particularly small businesses, well, all businesses in general. Businesses that have employees have to withhold the income tax from the employee. They got to do the accounting. They got to pay it over to the IRS. They got to file 5 income tax returns, or I should say employment tax returns, 4 941s, 1 940. They got to file the W-2s and W-3s at the end of the year. All of this reporting and record carries significant costs that, of course, are not reimbursed by the IRS. Businesses incur these costs, and that's where the compliance burden comes from. So when the businesses no longer have those compliance costs, those costs go away, is every product and service in the marketplace can be less expensive as a reflection of the business's savings on those compliance costs.
It'll save the businesses money in the long run, which will lower the prices in the long run, even though the sales tax will kind of eat into that margin.
Yeah, there's no question about it. Listen, we have a tax burden in this country. There's no eliminating the fact that the federal government is spending $6.5 trillion a year. They're going to spend that much money this year. And this includes deficits, right? So we're not even collecting enough money to cover the spending. So where does that money come from? When people see the 23% number, they panic a little bit. But the fact of the matter is, you got these federal taxes loaded on all of these different transactions, and most of them are hidden. This is one of the beauties of a consumption tax, is the tax is visible. It's right there up front. Everybody sees it, and therefore everybody knows what the cost of government truly is. Right now, Josh, people have no idea what the cost of government is, because most citizens in America don't, quote unquote, pay taxes in the traditional sense of sitting down at their desk and writing a check and sending it off to the federal government. Most citizens in the United States have that money taken right out of their paycheck. They never see it. And most citizens get a tax refund. And people who get tax refunds don't think they're paying any taxes at all. They think, oh, I didn't pay any taxes, I got a refund.
On that note, I would actually like to challenge anyone who's actually watching this right now to tell us, what is your tax rate? How much do you pay? What is the effective tax rate that you pay in percentage without doing any calculations? Can you tell us what that is? Because I have no idea.
Most people have no clue, Josh. No doubt about it. Most people have no idea how the graduated income tax system works, what the rates and brackets are, where the rates go up, where the brackets go up. They have no clue. And let's talk about the Social Security tax for a second now. Most people pay more in Social Security taxes at a flat rate of 7.65% of their wages than they do in income taxes, because the income taxes, they get a standard deduction. Maybe you get a Schedule A deduction for mortgage interest and charitable contributions or child credits and so on that come into play. None of that stuff, none of it, zero, applies to the Social Security tax. And so that Social Security tax is 7.65% right off the top, and you don't ever see that money. You don't write a check to the IRS for your Social Security tax unless you're self-employed. You don't file a tax return for Social Security tax unless you're self-employed. You don't get a refund of Social Security taxes, generally speaking. All of that money is just simply gone, and people have no idea what that burden is. So when you replace those hidden taxes with visible taxes, the consumption taxes, people cry out, oh my goodness, look at how expensive this is. But Josh, that's the cost of government. And that's what people don't realize. And that we need to make the cost of government transparent so people understand what this Leviathan is taking from them every year.
There's no transparency, and that's what needs to be solved.
Tax liabilities are hidden and the spending is hidden. And this is why the federal government has taken about $5.5 trillion out of the marketplace in the form of taxation. And they're spending $6.5 to $7 trillion every year, and it's got to stop. And this is the thing that's amazing about what we're seeing with the Doge here going on in the last couple of weeks. Everybody is in favor of cutting spending, but nobody wants to cut spending. Think about that for a minute.
That's what's going on with the federal shutdown right now, isn't it? Is because we can't come to some agreement on what actually gets cut, gets funded.
Yep. Everybody wants to cut spending. Everybody's in favor of cutting spending. Nobody wants to actually cut spending, because when it comes to a specific program, everybody's got their favorite subsidy, Josh. Nobody ever wants to get rid of their favorite subsidy. Oh, cut this program? We can't do that. That's helping people. Cut that program over there? No, wait a minute. I'm benefiting from that program, whether it's federal student loans or Medicare or Medicaid or this U.S. aid stuff that we've been seeing in the news the last couple of weeks. Everybody's got their favorite subsidy, and nobody wants to get rid of it. Well, that's why we got $7 trillion worth of federal spending. That's why we got a $36 trillion national debt, and it's getting worse every day. One of the things that's going on with this continuing resolution that they're debating about right now is an increase of about $4 trillion in the government's debt ceiling. So think about it this way. What they've done, Josh, is they've authorized themselves to get another credit card. So think in terms of your family. All right, you've got your family income. Let's say it's $100,000 a year. you've got 3 credit cards, total liability on those 3 credit cards is $300,000. Your credit limit's maxed out and you've been living on these cards. So now you say, well, I've got my income of 100 grand, but it's not enough to pay all my bills because of all this debt that I've amassed. So instead of figuring out ways to reduce your spending and living within your means, you just go out and get another credit card. That's what increasing the debt limit is. Getting another credit card.
Well, if only we could just do that. Can't you? Can't isn't does
Well, it never happened. I mean, it's one thing to get a credit card, but eventually for businesses and individuals, people like you and I, people with small businesses out there, they have to pay their debt. You get a loan from a bank to buy a house. Guess what? They want the money back. They've got a lien on your house. If you don't pay the mortgage, they take the house, right? So this is what happens in the real world.
Well, well, I suppose we could go down the rabbit hole of dischargeable and bankruptcy and what you could do with all that. But that's not the point, because ultimately the U.S. is never really going to default on the debt, and if they did, they would just the global economy would shatter.
File bankruptcy and default on its debt, because if it does that, it'll start a panic that we can't even begin to imagine. So it cannot cancel the debt. Yeah. I actually wrote an article on this years and years ago in the mid 1990s, Josh. I wrote an article that was published by the Foundation for Economic Education, and I know that article is still available on their website, Foundation for Economic Education. What will happen if the United States cancels the national debt? And of course, the debt is much worse now than it was then. So the topic is coming up again. Should we cancel the national debt? Well, you can't do that. You can't cancel the national debt because it would have such far-reaching impact on domestic economic relations and international economic relations, and it will be catastrophic. What has to happen is the federal government has got to get its arms around the spending, and people have got to recognize that we cannot continue to spend money we don't have.
That's for sure. Back a little bit on topic of, tax systems and tax ideas and taxes that you can imagine is basically where we derailed, because I started talking about what that percentage would be that would have to replace other taxes that people can imagine are things like the flat tax. And the flat tax is just another income tax that is flat across every level of income. So that wouldn't work to replace anything, right?
Well, no, it certainly wouldn't replace the tax system we have now. What we would do is replace the complicated rates and table, which is a good idea. I mean, it's a step in the right direction for sure. And it would simplify things, no doubt about that. But a flat income tax, Josh, is still an income tax.
Right.
You still have to file the tax returns. You still have to make and keep the records. You still got to pay the tax, right? You still got to write the check. And the biggest problem with the flat income tax is that businesses get no relief whatsoever.
Right.
Remember, the compliance costs are disproportionately loaded onto businesses and small businesses in particular. And so those businesses with employees still have to do the withholding. They still have to make the deposits. They still have to file the employment tax return. They still have to report to the IRS with W-2s and 1099s all of the transactions that occur. None of that requirement, that invasive requirement, is simplified or eliminated for businesses. A flat income tax is still an income tax.
Another tax that gets imagined and thrown around, and something that we see in Europe is called a VAT.
VAT is a value-added tax. That's what it is.
The value-added tax is essentially the idea that, you take a raw material, you add something, you do labor or something, you make it something else, and now that increases its value. So now that value gets taxed. That sounds like it would be a nightmare for business.
It is a nightmare, Josh. First of all, it's hidden. So the end user never knows how much of the product is actual production of the product and how much of the product is tax, all right? Completely hidden. All right, number one. Number two, it is very complicated and cumbersome system for businesses to keep track of it. Because of that, value-added taxes have a way of cascading through the production process. In other words, businesses end up paying taxes on tax instead of taxes on value added. People often confuse a value-added tax with a sales tax. They're not the same. The value-added tax is a manufacturer's excise tax that is imposed on the manufacturer of a product as it moves through production. So take the example of a book, for example. How does a book start out in the manufacturing process? So how does a tree? They harvest the trees,
right,
and the trees become timber. The timber is more valuable than the tree, so value is added.
Right.
Then the timber becomes pulp. The pulp more valuable than the timber, so value gets added. The pulp becomes paper. The paper is more valuable than the pulp, and so value is added. The paper becomes the book. The book is more valuable than the paper, and so value is added. So all of this happens through the manufacturing process, but the end user, the purchaser of the book at the store at the end of the day, has no idea how much of the cost of that product is book and intellectual property on the book and how much of it's tax. So it's very, very complicated.
Now, does sales tax have that same cascade? Because I could see how if you're a business that is in the business of selling to other businesses, does that mean you're going to end up having to pay, or those businesses pay pay you sales tax? How does that work?
Okay, that's a good question. And what you just described are inputs, right? Economists will refer to that as an input. So if I'm manufacturing an automobile, for example, my inputs are the steel and the aluminum and the plastic and the battery parts and all these various components, the electronic components and so on that go into making the automobile. When a business engages in a transaction with another business to acquire inputs that go into a final product, none of that is taxed under a sales tax. All of that's taxed under a value-added tax. None of it's taxed under a sales tax. So the business buys all of the components that it needs to make its product free of any tax. And then when the product is complete and put on the marketplace and offered to the consumers, the consumer pays one sales tax at one fixed on that product at the point of purchase.
So sales tax sounds like it's the fairest, the simplest, and the easiest to comply with. But the biggest concern that the internet will not shut up about, that it seems to be what is called a regressive tax. Now, you make the case that it is in fact not a regressive tax. It is a proportional tax. And we could go down that rabbit hole again, which maybe we should, but that's not the question I have right now. But why not turn it into a progressive sales tax? Why not build into the code something that hits people who spend larger sums of money, more luxury items, harder, so that in fact, you know, food isn't taxed as heavily as a yacht, for example?
Well, here's the reality. Let's just take medical care as an example. And this is the argument people use all the time. Medical care is so important. It's so necessary. We shouldn't subject medical care to a 23% tax. Well, first of all, most states already tax it anyway. And Minnesota even has a surtax on medical care. But let's set that aside for example, just for a second. Medical care, right now, the medical industry represents about 16%, 17% of the U.S. economy, right? So if you eliminate the sales tax on medical care, that means the tax on everything else has to be about 17% higher to recover the revenue. All right. The idea with any tax system is you don't raise revenue by raising rates. You raise revenue by spreading the base. Right. All right. We want the base spread out as far as we possibly can so that you've got really all of the items of products and services in the marketplace subject to tax. That way you hold the rate down. You hold the rate down as low as possible by spreading the base. All right. That's one thing. The other thing is this. The reality is that the fair tax proposal, the way it's written, includes a mechanism that introduces some quote unquote progressivity to the system and provides some protection for low income citizens. The bill calls it a prebate. All right. And so what happens under the prebate is you actually get a check back from the government on a monthly basis that's valued based on current poverty rates. All right. So the current poverty levels, let's just say family of two, $27,000. And so the prebate then would come back to you in the form of a check equal to the tax on $27,000 worth of spending. And that's how the prebate works. So it actually takes the sting out of the tax burdens that lower income people would bear.
So the fair tax has actually thought of this, you know, regressivity argument quite a bit.
Yeah.
Is there a better way to do that? Is there a better way to solve this regressivity hang up that so many people seem to just can't get past when it comes to implementing a sales tax?
Well, we've got to understand that the idea of a progressive tax is a Marxist concept, and it has no foundation whatsoever in law, economics, or constitutionality, or morality for that matter. The idea of a Marxist tax is designed to take capital away from producers and consumers and put it into the hands of the state. The whole idea of a Marxist income tax, which by the way is the second plank of the Communist Manifesto, a heavy progressive income tax, right? That's where the whole idea came from. That idea is promulgated expressly for the purposes of taking capital away from producers and putting it into the hands of the government. Remember, under a pure Marxist system, the government is in absolute control of all three elements of an economic system.
Ideological rantings aside, there's still this, what is it, sense of compassion that people want to believe that there is in this idea that people who earn more money should pay for more of the society than people who can't earn more money.
And first of all, under a sales tax system, that's exactly what happened. People who earn more money naturally spend more money, and therefore they pay more taxes. People that earn $500,000 a year go out and buy the Mercedes-Benz S-Class, right? And so they're going to spend 100 grand on a car. They're going to pay a sales tax based on that $100,000 car. Low-income people that don't make that kind of money, they go buy the Geo Metro. And so their tax is based on the cost of the Geo Metro, which is remarkably less than the Mercedes S-Class. That's what happens under a sales tax system. And that's exactly why, from an economic standpoint, a sales tax is proportional. It falls on all income levels in proportion to their spending. All right. High income people pay more taxes because they spend more money. Low income people pay less taxes because they spend less money. That's just an economic fact of life.
Well, then that's all for this week. Thanks for watching, taxpayers. And remember, there's no such thing as a hopeless tax case. And if you think yours is the exception, then call the office or visit our website to get a hold of Dan here. He can help you see the daylight. Dan, tell them where else they can follow along with your taxpayers' rights crusade.
Yeah, follow me at Pillow Talks Taxes. I'm primarily on TikTok, Facebook, True Social, and right here on YouTube. Make sure you subscribe, like, and share these videos, especially with your federal and state representatives. And if you have a tax problem, go to my website, TaxHelpOnline.com, and get help with your problem right now.